Good afternoon, everyone. Can everyone hear me okay? How's everybody doing? Can hear me? Good, good, good. Make sure I'm recording. Yep. Perfect. How's everyone's week? How did everybody do this week? I was actually down a little bit this week, believe it or not. I had some Momo kind of bit me a little bit this week on my some long positions. So it happens. I'm going to walk you through my good, my bad, and my ugly. Going to walk you through what I did kind of this week. Dustin, hello. Victor, Mike, Bill, Albert, Sammy, Chris, Edward, Terry. Hello, hello. Mike had a good week. How good of a week, Mike? Tell us. We need to know these things. All right, so welcome everyone to the live afternoon swing training room. We're broadcasting live from Nashville, Tennessee, and I am your host, Matt DeLong, and today is Friday the 13th. Can you guys believe that? Friday the 13th. November 13th. It's DeLong Friday. So Mike's saying his day trades went well, not swing trade. Yep. It makes a whole lot of sense. Yep. Where are my closet swing traders? You guys out there, my CSTs, make some noise. So I wanted to ask if anyone, I had this phrase that someone, I think Dave Ramsey is where I heard it from at first, where did anyone pay any stupid tax this week? Kind of do something stupid. I actually paid a little bit of stupid tax on some of my positions on Momo. Don't have it all fully automated just yet, but I will kind of show you what happened to me on Tesla. So back tail end of last week, I kind of got into some calls here on Momo. And for those of you who are not familiar, Momo is a momentum strategy on the 78-minute chart. And this red pink area kind of designates that we're in a downtrend. It got a flip of the switch there, which means we went from bearish to bullish. And I got my favorite little green thing. So I hopped in with some calls right here. Let's see, on the 3rd, which is Tuesday, so middle of last week. And everything was going well. Kind of going sideways, and was up a little bit, not a ton. And then you guys will see what happened here. I think it was on the 9th, on Monday. So I'm feeling pretty good about this. We got this green trend forming, right? We're bullish, we're going higher. And then we get this gap up, and it is what it is. You got lower and higher wicks, upper and lower shadows. And then I'm like, well, it is what it is. It's kind of an indecision. And then I get, this kind of pullback. I'm like, it's not so bad. And then you get this. And I'm like, dang it, man, it happens. It absolutely happens. So it's actually pretty similar to what happened kind of through here. Get a little bit of a downtrend, almost not quite the same exact pattern, but same kind of chop. And if you look, Tesla's done that a little bit. So on some of these stocks during at least the choppy season, known as the US election, it is sometimes it's good to just go ahead and lock in profits early. Nothing wrong with that. So anyways, all that to say that I got stopped out. I think it was down 0.8 R. So nothing huge on that, getting stopped on a Tesla. And that was, let's see, on the 10th. So that was on Tuesday. Yep. So let's play out the rest of it. Let's see what happens the rest of the time here. Continues lower. Yeah. So if anyone got in here at the close, you're going to be upside down just a little bit on the puts. But, it is what it is. That's the chop of the Momo is kind of what happens. That's kind of the Achilles heel. So let's take a look at a couple things here on the overall markets. Let's take a look at SPY. So SPY is, I don't know if you guys have noticed this. I was looking at this earlier, but does anything in here look remotely bearish to you guys? I mean, look at the size of the gaps. Does anything look bearish to you? It looks raging bullish to me. Now, if I was to turn on my magic markers here and turn on my, what I would call the distribution days, we have 4 that we've counted on SPY, just meaning going back 25 days. how many days, do we have some kind of selling that the selling volume exceeds the previous day's volume, and we have at least a 0.2% pullback. So that is SPY. And all that to say, be bullish, definitely be bullish. We still, let's see, what is it, like a week and a half after the election, we still, there's still some disputes and legal, it hasn't been certified who is the US president going to be. It's going to be one of two things. It's going to be Biden or Trump. That's it. Just one of those two. And hopefully we'll know at some point here before January, before the swearing in ceremony, right? But yes, Nitro pointed out the Biden vaccine news, right? That's right. Yeah. And so some of you pointed out this giant bear candle, but if you keep in mind, guys, we gapped up. So, if you're just studying, looking at the candles, we went from here and gapped up to there and then sold off, and we're already kind of, reclaiming half of that. So I don't know, to me, it doesn't look at all bearish. It looks pretty bullish to me. We got some kind of a similar gap action, where it's gapping quite a bit. And then, we're of course retesting some of the gaps. So I kind of expect this to go a little bit like this and then probably head higher eventually. I think it's still going to chop around a bit. COVID, a lot of states are still dealing with COVID and the craziness that brings. So that is that. Let's take a look at the Qs. Now the Qs have a little bit more. So if I turn on my magic markers for distribution days, we have 5. So I had them numbered now. So if you count back 25 days, we have a total of 5 distribution days on the, let's not turn on now, on the Qs. So today was a little bit of an inside. I don't know if you guys saw that. Today was a little bit of an inside candle. Inside day, kind of pennant pattern starting to form. I don't expect it to be, more, I do expect some kind of a chop and then kind of going higher. So be bullish, absolutely be bullish. And as companies are trying to get people to come back to work, right? And maybe the vaccine works, maybe it's effective, maybe it's not, all that's still to be determined. But there's still states that are locking things down, and it's just a crazy world. So welcome to 2020. This will be a chapter we'll put in our kids, or at least tell our grandkids and great grandkids about. So, okay, let's take a look at a couple more. Let's take a look at Fastly, and I want to show you exactly what I did this week on Peloton. So this is Fastly, and if I was to turn on my naked put growth, so for those of you who are familiar with naked puts or just selling put option, cash secured or naked puts, I sold one, let's see, in Fastly, I'm actually like double bullish, maybe triple bullish. So in Fastly, I have calls, I have, let's say, long calls, I am long shares, and I am short puts, meaning I sold puts. So all 3 of these are very, very bullish. And I do have some shares. So if I pick up some more at 70, I'm at the November 20th. So those will expire next Friday. Yeah. So next Friday, those will expire, and I'll either have the shares or I won't. And I keep the 302 regardless. So hoping to get some more shares. I think I only have a few hundred shares right now. So going to be adding to that. Yeah. So that is that. Which calls am I in? Let me log into my other computer real quick. Sorry, guys. I had it open over here and it went to my screensaver. Let's see. For Fastly, I have 70. What is this? March 19th, 70 strike calls. Yep. So I let's see. It says my cost basis is $14.30. So those are up a little bit. Almost an R. Yep. And the one that is really just eating me right now is this one, AYX. Has anyone in AYX? Let's see what that looks like on the Momo. Yeah. But like you guys see that there's some chop action, but it's kind of failing to kind of reclaim new highs here through this section. So we got this bearish move through here, kind of flips, and then quickly flips bullish, and then quickly kind of goes lower and flips bearish, then bullish. It's that chop that gets you. So the thing that I want to point out here is that this so AYX is a company that I want to own long term. So in the short term, it doesn't necessarily have to go up or down. This is a company that I plan to hold for a few years. So it is, I think I'm down like $5,000 on this one. I have a couple shares on it. And I do not plan to add any more. Does anyone want to tell me why I'm not going to be selling any naked puts on on AYX? Does anyone know? Looking at this. Why am I not selling? No, Chris is correct. Chris Stallis. Yep. So it is below the 200. So one of my rules is I don't mind selling it, but selling option premium, but I don't want it to go below, meaning I don't want it to sell it if it's below the 200, right? So this red line is my 200. I don't want to sell below, which just means if I have the shares, or if I have put options out there, that's fine. I'll keep them. I'm not going to do anything with it, but I'm not going to add to a position once it's there, because as you guys know, the 200 simple moving average is considered a long-term moving average. And when things go below there, or at least close below there, like this candle did, they tend to, bad things tend to happen kind of below there. So, yep. So Chris Dallas sold some December 100, but you have no, you sold some December 100. So yeah, I'm assuming you sold puts. So if you sold puts, you do have a position. It's just not actual shares yet, right? Yep. Okay. John asked, let me go back to Fastly real quick. What did you ask? Did you sell puts at the green level? So in my strategy, the strategy recipe calls to sell them at the green strike price. In my case, I'm trying to think, I sold them in one of these days. But this is like the maximum, right? So the green line represents a 25% pullback from the recent high. So the close of the recent high. So the recent high would be this candle right here, right? So that would be the recent high, and you take 25% away from that, or you take that closing price times 0.75, and that gives you this green line. And ideally what you want is this staggered, oops, Mr. Squiggle. You want this staggered stair step up, meaning it's making new highs, it's closing on new all-time highs. So because it is closing lower like this, I wanted to get a lower strike price. So on my formula, let's say that I'm using my 1% formula, which is kind of what I recommend. And if I'm selling put option premium at the end of October, let's just pretend it's November, and I'm selling it 1 month out, I want 1%. So in my case, I'd want 68 cents if I sold it on this day, which is basically 1% of the kind of the price over here, right? The 68, 62. So 1%. And so if I sell it out, that's what I want at a minimum. In my case, I was able to get even a lower strike price than here, down here at the 70. And I got more than, so I got a lower strike and better premium. And that, ladies and gentlemen, is the power of volatility, implied volatility, right? As things go lower, you can absolutely get some more, pick up some more shares, or sell some more options. So, yep. I just thought with puts, you sell below present day level. I'm not sure what you mean by that. I'm not sure if I addressed that earlier or not. Yep. Okay. And Edward L asked earlier, will you buy more calls on the retest and neckline on the double bottom on Fastly? I have to look at my total, how much dollar amount I have long, but probably not. I'm good with what I have now. You could say I'm triple long, not really, but I'm long calls, long shares, and then short put. So I probably will not with this. I know what you're talking about. So I'm not I guess you'd buy like calls, I think is what you're saying, is kind of down here. So I'm not necessarily going to be adding to it just yet. I need to calculate how much dollar amount I'm on the hook for all, when I add up all three of these, so I can do that, but probably not at the time being. Yep. Yep, my pleasure. Okay. So let me show you guys what I do with with selling puts. So all of you guys know this is my public watch list, Fastly, Pinterest. Let me just go ahead and paste this in the chat pane. But this is something I'm going to show you guys that I do is I turn on this 3-minute auto refresh. And again, I have the free version of FinViz. So I turn on the auto refresh and I set up some custom columns. You guys can do the same thing. It's not hard to do. And I sort of base on this change. And really what I'm looking for is at least 4.5% right here in my change. So I'm basically saying throughout the day, every 3 minutes, this is going to refresh. And I don't have to go look at anything. It's automatically going to do this for me. Now the markets are closed, so I don't necessarily need to refresh this. But during market hours, you see where it says down 7.29%, right? And this was down 4.6. So I do have some positions on both of these, and I will show you exactly what I did. So today I actually sold. Let me show you what I did here on Peloton. So naked put fans, this is what I did. So I got my green arrow, or I'm sorry, my green dollar sign rather. And I'm above the 100 and the 200, which obviously need to be above the 200 there. And if we're around $100 at the time, I need 1% per month. So here we are mid-November. If we go out to December and January, that would be 2%. So ladies and gentlemen, how much premium would I need at a minimum to sell at like this strike right here where the green line is? How much premium would I need at a minimum? Does anyone know? 1% times 2 months is 2% times $100. So I need about $2, right? Does that make sense? So what I did was I took 2% equals 2 months. So I'm going 2 months out, right? So I'm selling, let's see. So today I'm selling out 2 months. So November to December would be 1 month. December to January, right, would be month. So I need 2 months, but it's 2% times the price that it was at the time, which is $100, which equals $2 minimum premium. So ladies and gentlemen, I'm happy to announce I was able to get $5, and I even got a lower strike price up here at around the $100. I actually got a lower at $85. Does that make sense? So for example, if the stock kind of just chopped around between now and January, would this position be profitable? Yes or no? Yes, it would. So Dustin, I actually have 2 or 3 other put sales that are expiring in December, and I'm trying to not stack them all in one month, right? So I want some here, I want some over here, right? I want some over here. I want to spread them out, right? So it's not possible for them all to be put to me all at once. Like it's physically not possible when you stagger them, ladder them, space them out. So that's kind of why I chose 2 months. So in my case, Peloton, I sold the January 15, 2021 85 put strike for $5. And I sold 4 of those. Yep. So ladies and gentlemen, what would my actual cost basis be? If they're put to me, what is my cost basis? Is it 85 or is it a different number? John Sebastian says $80. Ladies and gentlemen, is that correct? And the answer is yes, it is. Very good. So $85 is where I sold, but I collected $5, like a $5 credit, right? So so if you add these two together, it'd be $80. 85 minus 5, I should say. 85 plus -5 is $80. So my actual cost basis will be here at $80. Now, as we go into the holidays, I don't know what Peloton, if they're going to sell lots of these, if the vaccine will make people, it's obviously going to be colder months anyways, vaccine or not. So people will probably be staying inside anyway. So I think it's a pretty safe bet. We'll see what happens, but that's kind of what I have. Now, ladies and gentlemen, what are my rules? When can I buy to close? In this case, what I did was I sold to open. When can I buy to close? When can I buy to close? Tracy says 50% premium capture. And what dollar amount would that be, ladies and gentlemen? That would be $2.50, and that is correct. So I sold it for $5 and I could buy it back for $2.50, right? $2.50 at the most. Obviously, if it has some massive gap, let's say next week it just goes crazy and goes higher and I'm able to buy it back for $1 or something, right? Then obviously I'm going to do that and I'm going to get more than 50% capture, right? If that happens like that. So, yep, exactly. Any questions on that, ladies and gentlemen? Put sales, one of my favorites. Yep. Someone asked the significance of the heavy green line. So this, John X, I think what you're asking about is this heavy green line is the strike price. That is the calculated mathematical strike price. So in case you nerds want to see what that looks like, let's see. I look for what is the recent high, and then I basically pull off, like I say, times 0.75, right? So that's kind of what that does. So I basically am saying, what was the high? I'm sorry, what was the close of their most recent, the high of the most recent close? So the highest close would be this candle right here, right? Correct? That would be the highest close. If I'm taking this candle and going back 200 days, that is the highest close, right? So what we're going to do is I'm going to take that number, which is 136.43 and 136.43 times 0.75, which basically means like 25% off, right? 25% off sale, right? And that is going to give us, what's the math? Let me do a quick calculator. 136.43 times 0.75 is 102.32. And that, ladies and gentlemen, is where my line is. 102 right there, 102.32. So again, what you want is obviously this is a trending higher, which is a good thing. And you want this stair step ladder pattern, which just means your close, no matter what happens, the close is getting higher and higher and higher. And then we do have a little bit of like a shelf here setting up, which is just means it's going sideways. And again, I'm looking back 200 days. So as you can tell, definitely the highest close right here, going back a good 200 days. So absolutely. So that is, that's how I think about put sales. And put sales at a minimum could obviously there's a bunch of different things you can do with it, but it is a little bit more of an intermediate advanced strategy. How many of you guys have never done a put sale? Put a 1 in the chat pane if you've never done a put sale. And John X, yes, that's the maximum strike that you're allowed. Yep. Because you're selling 25% from the highest close. Yep. Okay, so don't feel bad. Jack, Justin, Andre, Robin. So all of you who are putting in 1, don't feel bad. I think the ideal thing to do would be to watch some of the videos, and I can post my most recent video that I did on put sales in this chat pane. But ideally what you want to do is just learn about them. And if you've never traded options to begin with, I recommend you probably just pass for now, circle back around to it. Ideally, for trading options, the ideal plan is make sure you've been profitable at least 6 months in a row, just actual stock, actual shares. When you get into options, it gets more complex, and then selling options is even more complicated. And so you can really get yourself into trouble, because essentially what I'm doing is I'm providing an insurance policy to someone else, right? So I have kind of like a liability, an open liability when I sell put option. But all I'm saying, basically, I'm kind of operating like an insurance company, saying I will guarantee this price to whoever wants to pay me $5 for my 4 contracts. So I'm short 4 contracts. and I'm basically guaranteeing that price. Now, if it goes down to here, I'm still on the hook up here. So you have an open liability there that is a little different than just the normal stock trade. So I want to make sure that those of you who've never done put sales, you have some experience with options to begin with, and obviously you're profitable as a trading shares. And then the next step would be basic options, and then beyond that would be selling option premium. It is a lot more complicated, and you can easily get yourself into some trouble. You guys want to see the very first put sale I ever did? And you guys are gonna laugh at me when I show you this. This company that's even to this day still on my watch list. You ready? Who wants to see it? If you're wrong, get DeLong, DeLong Insurance Company. Yeah, that's right. Okay, ladies and gentlemen, the very first one I ever sold on was NVIDIA. Let me remove my drawings. I sold and I panicked. This was going back, let's see. Oh, geez, somewhere in the 2017 time frame. Now, this is NVIDIA, ladies and gentlemen. We all know where it is today, right? So worst case scenario, shares will get put to you. So I sold it right, let's see, I think I sold it on this day. Yeah, it was the beginning of the year. So I sold it right here. And I don't remember what I collected, but I sold a bunch of premium. And we'll just say by the time I got up to here, I was up nicely on the trade. Very, very nicely. I think it was up like $18,000. And I didn't pay attention to it. I, of course, like a noob, I didn't look at earnings. And next thing I know, I'm looking at it here, like it was a month or two later. And it went from being up 18,000 to being like down 12,000 or some, I forget exactly the dollar amounts, but I was thinking to myself, wow, I went from being, out of the money up here. I should have locked it in, right? Noob mistake. I didn't really have my refined rules. And then I went from being out of the money up here at 100 strike to being gapping down here and being, in the money and having that liability kind of knocking on my door saying, hello, time to collect on that insurance policy you sold. So anyways, I panicked and bought the close, and had I done nothing, I would have owned a lot of NVIDIA. And worst case scenario, and this is why we tell you to trade your plan, and that's your one and only job. But obviously, if I was to get in NVIDIA here and we were to fast forward a few years and I was to put it in an account and just forget about it, no one would be crying for me, right? Look at this, ladies and gentlemen. I would have had 5x on my money, but instead of, I turned a winner into a loser and then panicked and, missed out on this big run. So all that to say, make sure that you understand it at a minimum. And I did not, I apologize. Let me get the link for my intro, my option put sale class. But at a minimum, you guys can at least watch the video and play with it in a paper trading account. Don't throw real money at this just yet if you're not familiar. Okay, these are kind of dangerous strategies. They can make you a lot of money, but they can also turn against you. It's like the wind, right? It's great when it's behind you and pushing you forward, but at a moment's notice, it can shift and be in your face, and everything's hard and difficult, and it doesn't have to be that way, right? Okay, so yeah, Falco. Were you in on that too, Falco? That was like my first put sale, and I went in big and not understanding what I was doing, and then I panicked. And I remember Blake Anderson saying, Matt, just stay in it. You got plenty of time. I'm like, oh shoot, I already bought the close. And that's for those of you who trade your P&L. I don't know if you've heard that phrase, trade your P&L, meaning you're making trades based on what your P&L looks like. It's probably not the best approach, right? So you want to place the trade, execute your plan kind of independent of maybe what the P&L looks like, right? So if things are going well on the P&L, you want to get super aggressive. If they're going bad, you want to get super aggressive, right? And you kind of just double down on, and you pay some of that, what I call the stupid tax. So I paid a lot of stupid tax, and apparently Robert was there with me, but we had the noob action going on. We're both noobs. So, yeah. So Nitro said he remembered going big on Blue Apron and thought he was going to get rich. Are they still around? Is APRN? I haven't even looked at them in years. Okay, not pretty. Let me turn this off. Yep. So you guys can see when you're below the 200 simple moving average, bad things happen. What's interesting about Blue Apron is, let's see, where did they start at? Geez, they started up in the 150s. Now they're to 5. Geez. Best way to become a millionaire, start out as a billionaire. Oh my goodness, that's crazy. But the thing about Blue Apron is there's lots of, like, even our local Kroger, local grocery store here has prefabricated meals with all the raw ingredients in a box. It's like $8 per serving or something, and you can just pick out what you want. I always hate these membership things where you got to pick out what you want way ahead of time. You know, I don't get that. There is a company called Music City Fit that delivers to my front door. Music City Fit meals. So you can actually do this kind of thing, and it's the same concept, but but you just throw in the oven. You don't have to actually cook or prepare anything. So yeah, see a little salads. There's some pretty tasty food in there, but oh, it's making me hungry. Look at this. This is really good. I had this the other day. Anyways, getting hungry. Blue Apron. So Nitro is a fan of Kroger, and you're right. It does look like, John, it looks like an inverse ETF. Like the whole market's going higher, right? So this is one of the reasons why I say you want something in an uptrend. No matter what definition you use for an uptrend, this violates all of those definitions. Whatever you're using, certain moving averages, it's gone from, I don't even know. It's let me take a look, see. But at the end of the day, you want a company that's either growing or profitable. You don't want, so this is growing a little bit, but they're growing a little bit, but not by much, and they're losing gobs of money. So yeah, look at that negative profit margin. Yep. So they're not growing super fast, just barely, right? A little bit ahead of inflation. So anyways, I feel like those companies, there's not a lot that's super unique to them. Like there's very low barriers to entry, meaning lots of competitors can step up tomorrow and compete with them. There's nothing like super unique, even if they have like custom menus. At the end of the day, there's plenty of free menus out there online. So anyways, that's my rant for APRN. Let me show you a couple more on my list. Tell me if there's anything you guys want me to take a look at. Let me open back up here. So we looked at Tesla. Okay, one other one I got stopped out on was CrowdStrike this week on Momo. And you get the same kind of thing with Tesla almost, where we kind of went higher. It was profitable, and then this happened. Then I'm down. It was down like half an hour, so not the end of the world. And then it went snapped back the other way and went bullish. And then here we are kind of rolling down. So even if you got in bullish up here, you'd still be upside down a little bit. So I might just watch this one for a little bit. Now, long term, I still like it very much. And I do not have any current put sales on it. I did buy to close a few last week. And I'll be doing some more put sales on this. So that is CrowdStrike. Let's see. Let me scroll back up. Went from IPO to ZERO. Sad. Yeah, you're talking about Apron. Yep. Let's see. You want to take a look at Big Commerce? So my company that I sold competed against Big Commerce and Shopify, and these guys had an interesting reputation. I think they moved their headquarters, I think Austin, Texas, but these guys are originally based out of Australia, some Australian guys, which nothing wrong with Aussies. As you guys know, we have a branch in real life trading in Australia. But when I compared Big Commerce beside Shopify, and let me show you guys this little hack thing that I can do here. Shopify was growing faster. Everything was like all the things were stacked in favor of Shopify, the way I was looking at it. So if you guys know, you can enter multiple ticker symbols up here in this little search thing, and I'll put the stats side by side so you can see them both at the same time. I don't know, put a 1 in chat pane if you didn't know you could do that, but that's super helpful. I do this all the time. Sales quarter over quarter, and you compare these two. And yes, now of course the price to sales ratio is higher on Shopify, but look, it's growing 3 times. At least the most recent quarter was 3 times, right? But the price to sales is not 3 times. So, and I realize the price to sales, some of this stuff is not actual, just basic math. Sometimes it's exponential, so you can't just like type formulas in a calculator and figure some of this out. It is exponential, right? It's kind of it's more of an Excel formula sometimes. But in this case, 33% compared to 96. I don't know. You guys tell me which one's got the more dominant brand. The market cap is just head and shoulders above Shopify. If you were to dive into BigCommerce a little bit more, it doesn't post some of their operating margin numbers, but 128, it doesn't even show profit, positive or negative. So I'm not sure how that works, but to have 128 million in revenue and be traded at 35 times is a little bit steep. Shopify is definitely a steep price. However, it is kind of a leader, right? So you guys know that leaders get a bigger premium. So if you look at the price of sales, 45 is up there in the nosebleeds. No doubt about that. No doubt about that. But at least they're well, a little bit profitable. Yeah. Definitely about 10%-ish, 8%. Yeah. So, let's see. What about Shop 4 months after IPO? Yes, it was. Let's take a look. Let me shut this off, turn this off, remove drawing. Let's go back in time. I think it's 2014 or 15. What was it? Let's see. Shopify. There we go. So how many of you guys would have, I did this, so I know, but how many of you guys would have read this up and they got panicked and then this constant seesaw, right? You guys see that, and they opened right at 28 bucks, right? And how many people, who was the guy who sold down here or sold right down here? Who was that guy? I don't know what the plan was, but don't be that guy, right? Yeah, it did break. Yes, that's right. It did break its low. Yeah. And it kind of chopped around for quite a bit. So if you were to look at it on a weekly chart, let's take a look at my lines. Let's look on a weekly. So look at that, ladies and gentlemen. That is the definition of an uptrend. Now, it kind of was asleep for several years, right? And then you see these moving averages start sloping up and kind of right through here. You can see it breaks that level, holds, and then just kind of rockets higher, right? So long-term, if I had to choose between BigCommerce and Shopify hands down every single time. I don't know that you can necessarily, I mean, they're two different companies, but I think we made did we make a new low? No, not yet. Very close to a new low. So BigCommerce is okay. They do very similar things. Obviously, Shopify revenue and name recognition is far more superior than BigCommerce. My company's name was Core Commerce. The company I sold was Core Commerce. I don't even know if what those guys are up to. I haven't talked to them in a while, but probably a few years. But this is a company that I created and sold. Everything looks very different than when I was there. But yep, Nashville, Tennessee. Look at that. So that is kind of my thoughts on BigCommerce. Has anyone used BigCommerce and Shopify? Used them both like recently? I was familiar with them years and years ago. I've been out of that industry for 5-6 years, but has anyone? So Edward L. Spotify, or are we talking about Shopify? I think we're talking about Shopify. Shopify, yeah. They just announced an additional 1 million add-on offering. I think you're talking about BigCommerce. Is that what they did? Yeah, so that's the thing about companies that are losing money is they have to, I'll tell you this, guys, look at this. Is companies that are losing money, they have to constantly like refill their coffers, right? Because they spend more than they make. They have to constantly refill. And that's okay if they're growing a lot. 30% is not, 33%, that's not bad. It's not terrible. But it is kind of getting a premium when you put these two companies side by side. Shopify is a little bit more expensive, but certainly more more dominant. The sales last quarter was 3x. And guys, we're not talking about, you know, a $2 million revenue company. We're talking about 2.46 billion with 96% growth. I mean, those are big numbers. We'll just say lots of zeros on there. But so let's see, what did this let me see. Let me just go into BigCommerce. Let's take a look. I think that's the one you're talking about. Who did more? Shopify did one, I believe, a few months ago. PE and right. So, John Sebastian, I believe that FinViz typically on some of these numbers, like the 5 year, they have to be public for 5 years. So, like Shopify for 4.5 years, this was blank until they rolled into year 5, and then it got populated. But some of these numbers, PE is never going to be there if you're losing money. That'll always be a blank because you can't have a price to earnings because the earnings are a negative number, right? Let's see. Yep. Okay. Big announces pricing a follow-on public offering. Yep. And I don't know if you guys have thought about this, but timing wise, if you're the executives of Robert, you can probably speak to this, but if you're the executive of a company and you're kind of near your lows, that is not the best time to issue more shares, right? Because that's automatically going to dilute your shareholders. You're going to go lower. Ideally, you'd be doing it up here, right? But it doesn't make sense to do that, you know, 2 weeks after going public, just because it has that effect, right? Of it's going to push the price lower. So that tells me they might be in a bad spot. I don't know. It's terrible timing, and obviously they chose terrible timing for a reason. I can't really speculate, but it's not the best way to do that. Yeah. So typically, yeah, you typically sell, like do secondary offerings, third, fourth, fifth, when you're kind of pushing highs, not retesting your lows. So I don't know. It is weird that they've only been public for 3 months and they're already needing more money. I don't know. Maybe they got some company they're trying to acquire. I'm not sure. But anyways, when you do an IPO, you get a big chunk of money coming in anyways, and that should last a little while, more than 3 months, I would think. Otherwise, something's wrong somewhere. So anyways, I don't touch BigCommerce. But hopefully I answer your question. One other thing I want to ask you guys is, have you guys ever watched the video that Jeremy did where you are, when he talks about volume, and I call it like a volume pinch. So ladies and gentlemen, if we were to look back anywhere through here, do you see any volume bars, volume spikes where you have a lot of selling? This right here stands out, right? This is like the highest, this guy right here, right? It's the highest volume bar for selling, correct? Okay. So what happens if tomorrow, I'm not saying it is, but just hypothetically, if tomorrow closes above that, what will happen? It means all the sellers, including people who may be piled on short as it's retesting new lows, they will be pinched, right? And if you want to be bullish, that would be a good sign, is if it closes above there, above that the high of that candle, this short sellers that are in selling during that candle, during that day, they will be pinched, right? They will, no matter what, no matter where throughout the day they sold, even at the high of the day, the low of the day, close, open, no matter where inside that candle they sold, they will have what I'm calling a volume pinch, right? Do you guys see that? So if you wanted to get in, I would say a close above 70 would be a good spot to get in. This is not on my watch list, so it's a no fly for Matt. So, yep. Okay. Let's look at some more stuff you guys want to look at. Zoom, which we are using that right now. You should have some little ding when you say Zoom, when you're using the word Zoom, when you're using Zoom, right? So let's take a look on my put sale indicator. So this is not on my watch list, partly because it is very, very high priced valuation wise, if I'm not mistaken. I haven't looked at it in a little while. Let's take a look. Yeah, look at that, Robert. 85x of sales. Wow. So guys, imagine having a company that does 2 million in revenue. Okay. 2 million in revenue, just for easy math here, 2 million in revenue. And you're valued at 85 times that. Is that not crazy? So that'd be what, 180, 190, is that right? Yeah. No, 170. So imagine a company, you have 2 million in sales and you're valued at $170 million. Now that is quite an interesting number. Now, yes, of course, they are a leader. They also, I believe, do not have any debt. Where's my debt number? There, yeah. So they have no debt. They are growing nicely. So they do demand a premium, but I don't know if it's that much of a premium, 85 times revenue, right? So that's pretty interesting. So, but as far as put sales, if you guys want to do that, absolutely. You can see it's kind of bouncing off the 100 simple moving average. This was like a classic turnaround pattern where you have an up candle, an indecision, and then a lower. That is a classic turnaround. Evening star reversal. So if you guys are interested in selling puts, if you can get some decent premium, probably down in the 275 level, you guys can see that. Why pick that? That's not a bad spot. I don't know what the premium is. I can take a look, but you're still a good $125 away from that right now, between here and here. So, yep. At a minimum, you could also, tonight I'm talking about pyramiding. So you could also start to kind of leg into this if you want to own it long-term. And you guys know, as the price goes lower, the PS ratio that we were just looking at, that was 85x, that's going to go lower as well, which is a good thing, I think, for investors, for traders, or for investors, people who want to hold it long-term. But in this case, if you wanted to buy maybe a little bit here, buy a little more here, little thicker line, and buy some more down here, and or sell puts, I don't see anything wrong with that. So you're setting up a little pyramid here, right? This is the tip of the pyramid. You're going to be buying a little bit here. You're going to be buying some more down here, and then some more. And ladies and gentlemen, if you're doing that, maybe a fourth leg down here, but if you're doing this, would you be adding to a loser? Yes or no? You actually would be, but guess what? It's part of the plan, right? So maybe you do what most people do, is they'll do 10%. So let's say that you want, I don't know, X number of shares. You're going to buy 10% here. You're going to buy 20% here. You're going to buy 30% of your shares here, and then 40% of your shares here. Now, what happens if it never goes lower and it just rockets higher? What happens if it does this number and just rockets higher? Well, that's kind of what happens. It absolutely happens, especially on some of these growth stocks. It absolutely happens. And you just have to decide what you want to do. In that case, maybe what you could do to start your pyramid is you look for a 10 EMA close, right? So maybe you start the tip of a pyramid up here and you work your way lower. That's one option. That's one thing you can do. So there you go. That's kind of my thoughts on Zoom. It's not on my watch list, so it's not gonna, I'm not setting any trades up on it, but that's kind of what I would recommend. Yep. It's a long-term unbreakable basket. It is an unbreakable basket laced in gold and platinum as far as your entry fee to get into it. Yes. It's pretty pricey based on the sales so far, but yeah, absolutely. Do you think it's going to split? So they may. The only reason to really split a stock is to get a lower price, right? So obviously, if you want to buy 100 shares of something to do like a covered call, you have to buy it at whatever the current price is. If you were to split this in 3, like Apple did, like Tesla did, you get obviously a third of that would be your entry price. And so to have 100 shares, now splitting the pie doesn't actually add any real value. It just, for people who don't know better, like on Robinhood, some of those people who don't understand, they more people buy it thinking it's going to be worth more now, but splitting shares just brings the entry price down, right? That's really all it does for kind of the average mom and pop investors. So, yep. Albert, I missed your question before about what does the red number mean? Red, what do you think red means? Red is, it means super high. I think on the PS ratio, it means anything over 10, I believe, shows up in red. So it's just saying that these ratios are very high. That's kind of what that means. Yep. Okay. Decent volume is level. You still have the same pie, just more slices. That's right. It's like taking a slice of a whole pie, a whole pizza, cutting it into 8 pieces, and then you're like, okay, we got 8 pieces. Let's cut each of those in half again. So then you have 16 pieces. You still have the same amount, the same volume is still there. Now to make the pie bigger, that's where you do the secondary offering, like Big Commerce did. You're like, oh, let's make the pie from a large to an extra large, and then everyone who has a piece, their piece just got a little bit smaller, right? They got diluted quite a bit, or depending on how much they're raising. So that's how that works. Let's see. Let's look at one more that I'm looking at. I really like is Teladoc long term. So depending on what happens with a vaccine, I don't know if you guys have thought about this, but a vaccine isn't, I don't think, going to automatically fix anything. I think it'll help turn a corner, but there's plenty of countries who may have ongoing problems. I do know one person, I won't mention her name, who had COVID twice. So the herd, I don't know how that works with, they said once you get it, you can't get it again, but I know someone who's had it twice. So I don't know how that works exactly. I don't think everyone knows all the answers to this. I think it's still forthcoming and the world's trying to deal with this new normal. But even if a vaccine comes out tomorrow, it's not going to be widespread released. Everyone's not going to have it on their doorstep the very next day, right? So there's going to be some slow, delayed kind of responses to that. So all that to say that this telehealth, Teladoc, I think it's one that's really good. I'll be talking about this tonight in my class. I am setting up some put options. I'm going to be pyramiding into different levels. And I'm going to be jumping into this kind of a longer term. So in this case, obviously it just held the 200 simple moving average. So I don't have anything set up on it right now, but I'm going to be getting my plans ready, going to be tippy-toeing in and building my pyramid. So, yep, that's what I got for you guys. Also tonight, tonight we're going to be talking about position trading. How many of you guys know about position trading? And Edward, I'm not in Teladoc yet. So position trading live, you've not yet signed up. I'm going to be talking about this, and it starts in almost 30 minutes from now. We're going to be talking about this, and you can sign up. It's free. Sign up if you haven't. It's on our website. What's funny is people email us saying, where do I sign up for something? But in case you don't know, there is this thing here called event calendar at the footer of our website. All of our events that we have sign up pages for are here. We have some more events that are being planned that we don't have landing pages built yet, but that's coming up. And also Real Life Trading is hosting our very first 2020 Trader Summit. So this is a full day. You guys may recognize some of these faces through here. This is a full day summit. It is 8 hours. It is free to attend. If you want the recordings, we charge a little couple bucks for that. So that is coming up here in about a month on a Saturday. So it's a good 9 to 5, good day. Full day. And this is a great way, ladies and gentlemen, if you want to introduce some of your friends and family to real life trading without having them sign up for something or commit to anything, this is a great way to get them to do that. We will be publishing the agenda where we'll say Jeremy is talking about, X topic at whatever time. We'll be publishing that probably in the next week. So again, get your people to sign up for it. Get your friends and family to sign up for it. Share this on social media. Help us spread the word. And that's all I have for you guys today. Let's talk about Merchant Monday. What stocks? What do you guys, what would you like to take a look at? And I'll type them in here real quick so I can move them around. CLDR, Cloudera, yes. HAHA, HAHA, okay. Mongo, one of my faves. What else? Merchant Monday. Twilio. We can't have Merchant Monday without Shopify, right? Without Apple, KMB, never heard that one. What else? Pinterest. Yep. Tesla. There we go. What else? Datadog. First Solar. Win. Bill.com. Peloton again. Yep. What else? Snap. Baba. Yep. Shopify is already on there. FCEL, is that right? Walmart. Baba. Baba Boo. Yep, Baba's on there. Anything else? Max R. All right. Excellent. All right, ladies and gentlemen, thank you so much for your time. Have a good rest of your evening, and I'll see you tonight in class. And don't forget to love life, live life, and trade it. Thanks so much, guys. You rock. We'll see you soon.